It's already been a massive week for markets, but we're going to continue to see volatility as we move forward. And certainly as we end this week, there's going to be a big focus on the BoJ. Will we see them raise rates moving in the opposite direction to many of the central banks? And will that boost the likes of the Japanese yen and the Nikkei 225? Let's look into it. So here's the data as predicted by Trading Economics. First and foremost, it's worth noting that on Thursday night coming into Friday morning, this is UK time, we see the latest inflation data coming out of Japan. What you can see here is there's an expectation of higher inflation, 3.2 on headline inflation, core CPI 2.9 up from 2.7. So the trajectory is upwards for prices in Japan, and that provides the basis for further tightening, which moves in the opposite direction to many of the other central banks, the likes of the ECB, the likes of the RBNZ, the Bank of Canada in particular, cutting rates at a decent clip. Then you've got the likes of the Bank of England, the Federal Reserve behind that with a downward outlook, but not necessarily cutting to a great degree at the moment, as we see sort of question marks around whether inflation is going to remain subdued or not. But then we come into Friday. We've got the PMI numbers coming out, manufacturing services, and the composite reading, an expectation that we do see improvements across all three of those. And then we lead into the BoJ interest rate decision in itself, with markets expecting to see a rate cut. Now, part of that comes down to this inflation narrative. And you can see here, there's a view that we're going to see inflation rise from 2.9 up to 3.2, as you can see at the top end of this slide. And so that move to 3.2 really tallies up with the move that we've been seeing in terms of the Tokyo CPI figure, which is the blue line on the top. Essentially, if you're looking out for Japanese inflation, look out for Tokyo. It's the leading indicator of what the nationwide figure is going to do. And markets are expecting exactly that. Another move towards the upside, and in actual fact, a move above that 3.1 threshold, maintaining that same gap, not the same gap, but the same pattern that we've seen between the two, right? So Tokyo has moved towards the upside, but generally Tokyo is below the nationwide figure. And that's what markets are expecting with that 3.2 figure. You can see in terms of inflation, pretty significant figures over the course of 4 of the last 5 months when we look at the month-on-month figures. So it's not a case of inflation is going away. In actual fact, these low interest rates that we see in Japan are stirring further inflation gains on a monthly basis. You can see that sort of 0.5 figure, similar kind of figure, 0.5, 0.6 the month before that. So you're talking about like 1% inflation in the last 2 months alone in Japan. And you can see that also reflected through the annualized metrics at the bottom, 3-month annualized, 6-month annualized, both in the mid threes. So that signifies that essentially in the recent trajectory over the past half a year and quarter of a year, all of it is on putting us on track for a 3.5, 3.3 kind of area, right? Not 2%. So the idea that they need to stimulate to a greater degree and maintain that stimulative approach to raise inflation isn't necessarily there. Now, it's also notable that part of why they want to stimulate inflation is they want to see a cycle where we see wages push higher on the expectation of inflation, and soon enough inflation goes higher, people ask for higher wages go higher, inflation moves in turn with higher spending. And this is what essentially Japan have been trying to do for many years now. They've been trying to spur their economy back into life after many years of deflation and flat prices. Well, things are moving once again, and that's a positive thing. And the fact that we've seen this uptick in terms of, in particular, headline inflation and wage growth does provide the basis for the BoJ to say, you know, we've done our job and we're feeling confident enough to raise rates once again. Here's the outlook for this meeting. You can see 0.25 rate hike up to 0.5. That is currently priced in an 86% chance. So 86% chance of a hike. And then from there onwards, we're looking at the possibility of another hike more towards sort of back end of the year. So September, October, December, that kind of time. And so that's also going to be a key part of this meeting, right? Is do they hike? And markets are predicting, 86% chance that we do see that rate hike. And then do we see them laying out a pathway for further hikes over the near term rather than in sort of Q4? So that's certainly something to be watching out for, because by and large, markets are pricing in this hike. And so there's always going to be question marks about, if they're hiking at the same time that everyone else is easing, then at each hike, you're going to see the Japanese yen strengthen. It's not necessarily the case. And a lot of the time when you're seeing the currency having reacted in advance to it, and when you see high percentage chance attributed to that event, and this occasion is 86%, then you might not necessarily see the same kind of market reaction that might be anticipated. One relationship that's worth noting is the trajectory of the US dollar against the Japanese yen, or the Japanese yen as a whole, does tie in pretty heavily with the Nikkei 225, and that's something we'll be looking at as well. So weak yen generally provides the basis for strength when it comes to Japanese equities. Let's jump on the charts. This is the chart for the pound against the Japanese yen. From a sort of wider perspective, this is the daily chart. You can see this upward trajectory over recent years, but the pullback that we're seeing at the moment takes us back into the realms of a possible breakdown from here, potentially, or that we're seeing another decline in towards this sort of trend line support for the bulls to come back into play. There's another potential trend line here. So by and large, we're in a very deep retracement zone if this is a retracement, and certainly the kind of area that if we don't bounce from this area, we could end up breaking the 188, and that provides the basis for a sort of slanted head and shoulders formation, because you can see this lower shoulder compared to the head there. You're looking at the potential for this to be a pattern for us to break down from. But a couple of things would need to happen for this, and part of it is the idea that the UK is in a position where it's going to be easing to a greater degree. Now, we did see some of that last week. We saw inflation coming in lower than expected across both headline and core. We saw weak retail sales. We saw worse than expected UK GDP. But now we've seen the UK jobs report, and that actually provided, a higher unemployment rate figure. But we did see a higher than expected wage growth figure. And so that highlights the ongoing sort of battle against inflation. So where we are at the moment is we've come in a very deep retracement. If we break the 188, it looks like we could then see significant downside from here. But at the moment, we're sort of seeing a bit of a pop. And so let's look at it on the intraday basis. And you can see here, we've got this very clear downtrend in play. The recent pullback has taken us into the just below the 76.4. So we've come into a very nice deep retracement thus far. And as it stands, you can see that we're trying to pop up once again. Doesn't necessarily mean that the bulls are fully in charge. I'd need to see a breakthrough 193 to feel confident that this sort of selling pressure is going to abate and that the bulls are back in the driving seat. But certainly we're at a sort of potential turning point, but also, it could be a turning point on the intraday chart, right? So retracement, sell off, and then the turning point is the bullish turnaround once again. But also you've got the potential for this to be a turning point where this wider resurgence has taken place over the last sort of half a year ultimately ends. But we need to see a breakthrough 188 for that to come into fruition. So this is going to be a really interesting one. And certainly if we see that rate hike, which seems likely, of course, you've got a high likeliness of that priced in by markets already. But we still have some pricing against it. So that points towards a little bit of room for maneuver when it comes to strength. But then you've also got that outlook, right? Is it going to be Q4? Is it going to be September or Q4 that we see that next rate hike? Or do they come out with a more hawkish statement than that? And that could provide the basis for this to roll over. So I would say there's some question marks really around this chart at the moment. And certainly whether we sort of break towards the upside through resistance, or whether we break through that 188 support, really will provide the basis for us to gain confidence over our view. Now, in terms of we don't want it on that. We want it on a different price scale. So we can see here that in terms of the Nikkei 225, you can see we've been sort of seeing this resurgence, but then we've essentially been sort of flatlining here. Now, in terms of dollar yen itself, we are managing to create higher highs, but now starting to roll over. Well, what's been happening in terms of, and this sort of shows you that long-term sort of strong correlation between the two, right? So generally, sort of weaker yen provides greater upside for Japanese equities. Well, we're moving towards the upside once again. And essentially, we're in near enough a range-bound market at the moment, right? So you can see here the top end around about 40284, and the bottom end, we are sort of gradually grinding higher, I'd say. So you could say the sort of most recent levels of note would be 37630, and then your sort of 38206, and that's the zone that at the moment we're turning up from. But certainly, if we come into this resistance zone, then that provides the potential basis for the bears to come back into play once again. Because bear in mind, we've been in this consolidation sort of mode for some time yet. So near term, it does look likely we're going to see further upside, and that would point towards further upside also for the likes of dollar yen and sterling yen. So the possibility that the near term pop is the basis for further strength. But even if we see this near term pop, there's going to be question marks, because 1, 2, 3, 4, 5 times we've tried to break through that 40284 level and failed at each occasion. So will it be different this time around? Potentially the BoJ meeting might provide the basis for that. But certainly if you look over the near term, you can see this looks like a sort of basing pattern here, where we've consolidated, ultimately broken through resistance around your sort of 39,000 mark, and now starting to move into a more positive trajectory here for the Nikkei 225. I hope that's useful. It's going to be a big week ahead when it comes to data, most notably with that BoJ meeting taking place overnight in Friday morning here in the UK, and also that inflation data coming late on Thursday as well. Plenty to sink our teeth into. As ever, we'll be providing you with previews for different key events, but also the economic data and the corporate data that we will be looking ahead to for the week ahead. So make sure to like and subscribe for more content from us here at Scope Markets.